Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Turkey. Now, if you're a regular viewer of the channel, you'll know that we've been talking about Turkey for the past 3 years, but I haven't actually posted a video for the last couple of months because a lot of the news about Turkey in that time was related to what was happening in Syria. As you can see from this map, Turkey shares a substantial amount of its southern border with Syria. And it's been reported that Turkey was providing significant support to the rebels that overthrew the Assad regime at the start of December. Now, this video obviously isn't about Syria, so I'm not going to go into any specific detail about what's going on there. But you can see from this map that there is still a lot of division in the country, despite the fact that the previous rulers have now been overthrown. And Donald Trump recently came out and said that he believes that Turkey holds the key to Syria's future. So the civil war in Syria has been taking up a lot of Turkey's headlines, and you may have missed the fact that in the last quarter, Turkey has now officially fallen into recession. This chart shows the quarterly reported GDP growth rate for Turkey, and as you can see, in the second and third quarters of 2024, GDP has fallen into negative territory. It fell by 0.2% in both quarters, and the technical definition of a recession is when you have 2 consecutive quarters of falling GDP, so Turkey is now officially in recession. And if we look at this chart, which shows the 12-month rolling GDP figures, it shows that the full-year GDP figure of 2.1% in the third quarter of 2024 is the lowest that Turkey has seen in the past 3 years. And those falling GDP figures are obviously a major concern from Turkey's point of view because it needs to keep growing to try to rebuild the economy. This chart shows the movement in the official rate of inflation in Turkey over the past 12 months. And what this shows is that between November 23 and May 24, inflation was still rising in Turkey and hit a peak of 75% in May. However, over the past 6 months, inflation has started coming down. And the latest figure for November 24 shows that inflation is now down to 47%. So obviously the fact that inflation is now starting to reduce in Turkey is good news. However, prices year on year have still risen by 47%. And if you take a step back and think about that, a 47% increase is absolutely huge. Obviously, it's less than it was in Turkey, but it's still outstripping wages, and therefore people have less money. And if we have a look at this chart, which shows the current inflation rates for the G20, you can see that Turkey has the second highest rate out of every country of the bigger 20 economies. The only country that has more inflation is Argentina, where it's currently 166%, which is completely off the scale. And in fact, Turkey is the only other country that has inflation in double digits. And as you can see, the country with the third highest inflation currently is Russia at 8.9%. And you can see that inflation is rising in Russia. And if we compare the situation for every country in the world, you can see that Turkey has the 5th highest rate of inflation. The only countries with more are Argentina, Syria, which has just gone through a civil war takeover, and inflation is sitting at 120%, South Sudan, which is also a war-torn country, where it's 107%, and Zimbabwe, where the economy collapsed many years ago, where inflation is now 57%. This chart shows the year-on-year movement in food prices in Turkey, and we always have a look at food inflation because it's really important because the poorest members of society spend a much larger percentage of their monthly and weekly budget on food. And what this chart shows is that the rate of increase of food prices has actually started going up again in Turkey. And the official figure for November shows that year on year, food prices increased by more than 48%. So all of those inflation figures make for grim reading, but is there any signs of encouragement? Well, this chart shows the monthly movement in inflation, so basically measuring the change in prices from one month to the next. And what this shows is that in November, the monthly increase was 2.2%. And if we were to annualise that figure by multiplying it by 12, it would indicate that the year-on-year movement in inflation, if prices were to continue at the same rate as they did in November for the next 11 months, would be somewhere in the region of 26 to 30%, so significantly below the current level of inflation. And when you look at this chart, you can see that over the past 12 months, the month-on-month movement has been much higher. So the overall trend here is encouraging. However, it really depends on whether or not Turkey can keep the monthly movements limited or if we start to see rises again. Now, if you're a regular follower of the channel, I'm sure you'll be aware of the interrelation between interest rates and inflation. The traditional theory says that when you have high rates of inflation, you should be increasing interest rates. And historically, President Erdogan wasn't on board for that. He was operating a contrarian approach. He was actually doing the opposite. Turkey was reducing its interest rates at the time of high inflation, and what happened was that actually forced inflation higher. However, since he's been re-elected, he's changed his perspective. And since June 23, there have actually been 9 consecutive interest rate increases from the previous level of 8.5% to the current rate of 50%. And if we look at this chart, which plots both the rate of inflation and the rate of interest, you can see that the two crossed over in September 24. So interest rates are now higher than the official rate of inflation. And there are hopes in Turkey that means that interest rates can start coming down again, because 50% interest rates obviously are prohibitively high in terms of companies and individuals taking on any debt. Nobody wants to pay 50% per year interest on money that they're borrowing. That is extremely expensive. And as a result of that, companies in Turkey do not want to take on debt to invest into their businesses, and that is slowing down the growth of those companies. One of the contributing factors to the increase in inflation has been the weakness of the Turkish lira. This chart shows the movement in the exchange rate between the US dollar and the Turkish lira over the past 5 years. And what this shows is that 5 years ago, $1 US was trading for around 6 Turkish lira. Today, it's trading for more than 35. So that represents a fall in value of around 6 times over the last 5 years. And if we zoom in and have a look at what's been happening over the past 12 months, you can see that this time 12 months ago, $1 US was trading for around 29 Turkish lira. So over the last 12 months, we've seen a deterioration of more than 20% in the value of the lira. And the reason why the value of the lira is so important to Turkey is because it's a net importer. Turkey is importing large quantities of fuel and food. It doesn't produce enough to be able to satisfy its own demand, and therefore it's having to buy in the international markets. And every time the lira devalues, we're seeing the price of that increasing for all of the people in Turkey. So that's one of the main drivers for inflation in Turkey. And that's a really difficult thing for Turkey to be able to solve. And the problem that Turkey has is that there is now a high level of dollarization. The people in Turkey have lost faith in the Turkish lira, and so they prefer to be paid and to use things like the euro and the US dollar rather than the Turkish lira. And that makes it difficult for the central bank to be able to stay on top of what's happening in the economy. So what's the summary and conclusion today? Well, I wanted to post this video because I think the fact that Turkey is now officially in recession is a really important milestone, because up until this point, Turkey was struggling with high levels of inflation and a fall in the value of its currency, but it was still growing from a GDP perspective. But over the past 2 quarters, we've seen that GDP growth contracting and actually falling into negative territory. And this is a major problem from Turkey's point of view, because they need to boost their economy. Turkey is a manufacturing country. It produces lots of things. It buys in raw materials and then manufactures things and then exports them. And the fact that GDP has fallen tells us that the manufacturing industry is now struggling to keep those growth levels up. Now, in terms of the positives from what we've seen in today's data, inflation has fallen for a 6th consecutive month. So that's obviously good news, because it's one of the key targets to bring inflation back under control. But the bad news is that inflation is still sitting at more than 47%. It's one of the highest levels in the whole of the world. There are only 4 other countries that have a higher rate than Turkey, and that's obviously a major problem. Now, we saw from the monthly data that the monthly increase is down to 2.2%. And if Turkey can keep it at that sort of level, then inflation will come down to less than 30%. But 30% is still extremely high. The Bank of Turkey has set a target of 25% inflation by the end of 2025. And I think that really puts into perspective the problems that Turkey is facing, because even if it stays on the same monetary policy that it's focused on now, it's hoping to get inflation down by this time next year to 25%. And obviously 25% is still extremely high, because in order to maintain your standard of living, you would need your wages to be increasing by at least 25%. That doesn't take into account any taxes that you'd have to pay. Obviously, if you're accounting for taxes, you'd probably need to get something like a 35% increase. The problem is nobody's getting a 35% increase. And if you did start increasing wages by that sort of level, it would obviously fuel inflation because people would have more money, they'd spend more, demand would go up, and therefore inflation would rise. So it is actually a very difficult thing to fix from Turkey's perspective. And when you take into account what's happening with the value of the lira, it is still falling on a weekly basis. The value is dropping all the time. And that means that all of the imports that Turkey is buying in, and that's basically buying in a lot of imports, the value of all of its exports is less than the cost of all of its imports. So it's running a negative balance of trade at the moment. And the problem that Turkey has is turning that around is going to take a lot of investment and a lot of growth. And we're not seeing that at the moment. So the overall summary of today's video is that Turkey is continuing to move slowly in the right direction. We're continuing to see inflation coming down. However, it's not happening fast enough. And unfortunately, the economy in Turkey is now officially in recession as a result of 2 consecutive quarters of reducing GDP. That represents a major problem for Turkey because it's a manufacturing country. It's built upon its industry. And if its industry is now contracting, that represents serious bad news for Turkey and the Turkish economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.
What?
It's going from side to side. What?
Let's go into side to
The
side.
dog!
No, it's stuck. Alright. It's back on that side. What?
It's going from side to side. What?
Let's go into side to
The
side.
dog!